Did you know you can contribute up to $69,000 into your 401k? This strategy is commonly called the Mega Backdoor Roth, and I'm sure many of you have heard about it, but what I wanted to do very quickly today is explain to you some of the top mistakes I see people make when it comes to the Mega Backdoor Roth, and also just help you understand some of the tips in order to make sure that you're maximizing this opportunity. Now, how does a Mega Backdoor Roth work? There are really two types of contributions that you can make into your 401k. There's a standard maximum $23,000 that you can deduct from your taxes. And then there's an additional $46,000 that you can contribute that is not tax deductible, but you can utilize a conversion to turn it into a Roth 401k or a Roth IRA. In order to find out whether you can or cannot make a Mega Backdoor Roth contribution or this after-tax contribution, the process is actually very, very simple. All you need to do is go to your 401k portal, log in, go to the contributions tab and click change contributions. Now, if you are able to make 401k Mega Backdoor Roth contributions, what you will see is an after-tax box. If you don't see this box, it is very likely that your 401k provider just does not allow for it. Now, it's not that there's any IRS rules preventing you from doing it. It's simply that your employer does not allow for it, meaning that time to find a new employer or speak to HR, see if you can incentivize them to change this plan. There are three mistakes I commonly see clients make when it comes to the Mega Backdoor Roth, and the very first one is not understanding the full impact that it can make on your financial outcome and also the flexibility that it offers. What do I mean about the full impact? So let's just compare your two options. Let's say you can save additional money and you're thinking about making contributions to your brokerage account. Well, let's assume you're making a rate of return around 6%, you're contributing for 30 years, and you're making a contribution of about $30,000. If you were to do this exact same contribution, same exact growth rate into the Mega Backdoor Roth versus a brokerage account, you would accumulate about $600,000 more over that 30 years. Now, how does that happen? First thing is that annual distributions of dividends, interest, and capital gains are completely ignored in a Mega Backdoor Roth or in a 401k. And then finally, when you're actually distributing the assets, if you were to do it out of a brokerage account, you're going to pay capital gains, but with a Roth IRA, 401k, you don't have to worry about any of that. So it is going to make a meaningful impact on your financial future. The second part of that mistake is underestimating the flexibility. I hear this a lot. I don't want to contribute to my 401k because what if I retire early? What if I need that money sooner? I don't want it to be locked up. And a big shocker to everybody is that you can take out the contributions, the principal, tax-free, penalty-free at any point in time. You just have to leave the earnings, the growth in the 401k until you're age 59 and a half for at least 5 years of that growth. There are some rules around that, but the contributions and principals are completely flexible, meaning that if you're doing $30,000 for 30 years, that's $900,000. That's a down payment. That's a start of an early retirement. So there's quite a lot of flexibility there. Mistake number two is not correctly calculating the amount to put into the after-tax box or just not setting up contributions correctly. Now, when you look at your portal and you look at change contributions, there's usually three boxes, pre-tax, after-tax, and the Roth 401k. The Roth 401k is not the Mega Backdoor Roth. The Roth 401k contributes to that initial $23,000 of your 401k max. The box you want to utilize to maximize the Mega Backdoor Roth is the after-tax box. And how do you calculate the percent that you want to put into that box? Well, first you want to take the full $69,000 number. You want to subtract the maximum that you've contributed, which is about $24K. And then you want to subtract any employer match from that as well. So whatever that net number is, let's say it's 20,000, 30,000, whatever it may be, take that number, divide it by your salary, your compensation, and that should give you a rough percent to put into the after-tax box to maximize the Mega Backdoor Roth. The third and final mistake that I frequently see people doing is not completing conversion. And this is a really big one. So what do I mean by completing conversion? It's not good enough just to put the percent in the after-tax box, because if you just leave it as is, any money that grows in this after-tax portion will eventually be taxed similar to like a regular 401k or an ordinary IRA, meaning all the growth is going to be taxed. what you want to do is convert that contribution that year into the Roth portion of your 401k. That will allow all the growth to be tax-free. At most companies, or let's just say at some companies, it's a simple click of a box, right? There's a little check mark, you click it, it automatically converts. Some other companies, you need to call in and ask for them to set up the automatic conversions. And worse yet, at some companies, you have to call in every time to convert, making it quite a big hassle, okay? So we talked a little bit about how you can tell whether you have access to a Mega Backdoor Roth. We talked about 3 mistakes. And there's a lot more rules behind this, a lot more complexity, sophistication, understanding your cash flows, and really kind of honing in what is the right strategy for you given your unique financial situation. We have a great blog written on this subject in more detail, so check it out on our website, rhsfinancial.com. And if you need help with your Mega Backdoor Roth issues or problems, let me know. Feel free to reach out to us.